Good afternoon. Good morning, good afternoon, good evening, wherever you are. Hi, Jen. How are you doing? Let's see. Give a couple of minutes before we get started. If you are watching us on YouTube, drop a message, say hi, and also, hey, Ayakame. Good to see you. Good morning. How are you? If you're on TradingView, drop a message and say hi as well. It's I was going to say it's not. It's non-farm, but it's not non-farm. It's FOMC. It's a lead up to the FOMC. We are just having. Let me just do this quick one. We're just having the release of the pound CPI number, and what was it? 10.4. Big disappointment. Not a slowdown on the CPI data. Seeing the pound shoot towards the upside. Very good to hear, Ayakame. Hey, if I read your name wrong at any point in time, please let me know and tell me how to say it properly. All right. Right. One more minute, and we shall get started. Let's see who else is going to say hi. Where's BL? BL normally comes in quite quickly. Have you guys been trading? Anyone trading well? Well, any entered any trades? Up. Hey, Daniel Z. Good to have you here. And if you are joining us on YouTube, my TradingView link is there. My TradingView profile link is there. Make sure you do jump onto TradingView and give me a quick follow as well. You get the notifications of the webinars. You get the notifications of the publishing the articles that I publish. Hey, his Hank. Sorry, butchering nickname. Hey, Maslone. All right, let's get started. So, again, thank you all for attending this session, the daily market analysis, where we get through the fundamentals. It's going to be heavy today. The technicals, prices have been sitting in a bit of a consolidation, so we look at that. And then putting that together, we put the fundamentals together with technicals, look for it to align or wait for it to align. And then we have our trade setups for potential trading opportunities. I will be identifying entry levels, stop loss levels, take profit levels. All right. So, as usual, if you do have any questions at any point in time, please feel free to put it into the chat, whether it's on TradingView or on YouTube. When I look to this side, I'm actually looking at the chat. All right, so I'll be happy to elaborate more, explain different parts of it to you guys. And also what we did yesterday, which was quite good, where I asked if you guys are entering any trades or have entered any trades. We had a number of people who shared their trade ideas or their trades that they got into. We can do a quick review of that as well. Okay, so I'm looking for this more as a two-way street. I provide you the daily market analysis. You share your trade ideas. You share what trades you got into, and then we can make this a little bit more lively rather than just me rambling on and on and on and on. Okay. Um, hey George, how are you doing? Hey Spiros. Hey Desiree, good to see you here. Hello. And Kedar as well. How is gold today? I will get through to gold later on as well, so stay tuned. Please, when you can we see NZD CAD? All right, we'll do that as well. No worries. A quick request coming in from you guys. Looking forward to it. All right. So as usual, a quick disclaimer before we move on. Any information contained in this webinar should not be construed as advice and is presented as educational material only. Your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness for your circumstances. The contents of this webinar are not intended to be a recommendation to trade a financial product. So please do your own due diligence, DYODD. I explain this every day already, so I'm not going to go through all the details. But the main thing is that we do look at many different pairs, many different possible trade setups. Some can happen faster than the others. Some will lose money, some will make money. So please make sure that as you go through the session, learn how to take the aspects I'm sharing with you, try and integrate it with your own trading strategy as well. Ask questions, learn. If you do jump into any trades, please make sure it fits with your own trading strategy as well. All right. Hey, Nick. Good day. Good to see you here. Okay, so let's get going. And fortunately for us, today, Forex Factory is working. Right, it's working nice and well today, bringing us the bad news, well, relatively bad news, where just right now as we start, the pound CPI year on year was 10.1%, expected to signal a slowdown to 9.9, a slight slowdown to 9.9%, but what we actually had was it was released at a 10.4%. So what this means is that it's not just good news go up, bad news go down. What this means is that at 10.4%, inflation in the UK is still climbing. Inflation in the UK is still climbing, and that's very unfortunate because we're seeing inflation in Canada already slowing down somewhat, right? Slowing down somewhat. Inflation in the US and pretty much across the board, everywhere else is slowing down. So it was a little bit of a surprise to see the inflation data for the UK come out higher, not just higher than forecasted, but higher than previous, signaling that inflation is still growing faster than expected and faster than previous. Okay, hey BL, how are you doing? So this puts it all into perspective where tomorrow we do have the Bank of England right here. Bank of England with the interest rate decision was 4%, expected 4.25%. So it's going to be quite interesting. I don't think at 10.4% is going to influence the bank rate decision. I don't think they're going to push it up to a 50 basis point rate hike. I think they're still going to stay at 4.25 or 25 basis point rate hike. But I think that that's going to have a bit more of a reaction now, right? Why I say that is because if this came out at a 9.9 or 9.8, signaling that slowdown in inflation growth, then a rate hike here tomorrow is, market might consider it as a bit of an overkill, or they might start thinking that the Bank of England might start talking about a slowdown or pivot in the interest rates decision, right? Given that CPI data now is higher than expected, higher than previous, possibly going to see the Bank of England, the BOE, hike rates by 25 basis point and possibly sound a little bit more hawkish than we would have expected if it was a slowdown in the inflation growth numbers. All right. Hey, Robbie, how are you doing? So that was the news that came out. You can see over here, I like this. This was a relatively new edition. I like this. That gives you a quick overview of where prices are heading. You can see that pound shooting straight up because now the likelihood of the rate increase is higher, together with the pound yen as well. Okay, the euro pound, obviously, as the pound shoots up, the euro pound drops. because of the news. Hey, Angel Case, how are you doing? Okay, so that's happening right now. It's 3:10 p.m. now. It's three. It was released at 10 minutes ago at 3 p.m. But let's see what happened yesterday as the last night. Hey, I am Miko. How are you doing? Good morning. Okay, so yesterday we had no, that's not yesterday. Wait. Yesterday we had the Canadian CPI data release, right? Um, just a quick review here is that when we spoke about the Canadian dollar, the loonie, we had this whole setup, and this was on the H4 time frame. We had this whole setup where we were saying, hey, if CPI data was stronger, that's going to lead to possibly more rate increases to come from the Bank of Canada, given that they've paused it for now. If it was weaker CPI data, we could have seen this push towards the upside. So what happens? As usual, median CPI was released at 4.9. It was slower than previous, but not as slow as expected, while the trimmed CPI was released at 4.8, slower than expected and slower than previous. So that's actually relatively good news, right? It's relatively good news despite the red and the green numbers. Thank you for the shout out. All right, right. Despite the red and green numbers, if you approach this and you're not sure what happened, what most people tend to do is go, oh, red buy, red sell, green buy. Right? It's not just that. You want to consider it as 4.9. It is slowing down. 4.8. It is slowing down. Just a bit, not as quick as expected. So what we actually saw there was as the news got released, that shot down. I'll zoom in a bit more as you can see. All right, it shot down, didn't clear, and then it shot up. This upward move was because of the dollar. Right, it was because of the dollar. It broke up, hit that level, and then now it's trending back down again. Why I would say that now I've switched to H1 time frame. Why I would say that this would not be a trade that you would have got into is because too zoomed in. Right, it's because this breakout happened at 11, right? 11 GMT plus 8. The news was released at 8:30 GMT plus 8. Okay, so it's been quite a long time since the news release and while it broke. So I would have, just to share with you all a bit more about trading the news, is that the news got released at 8:30. There's a 9 o'clock candle there. Shot down, didn't break, shot up, didn't, got resisted by the upward level there. So that's at 10 o'clock. Within that hour, I would have said that, okay, it's out, right? I'm not rather a trade didn't happen because of the news. Those two pending orders should be deleted before, right after the news, right? It didn't spike down and trade lower, or didn't spike up and trade higher. So you should have closed off or canceled the orders right after that news event. Okay. Morning, M Leader. How are you doing? How do you get those mini charts on top of Forex Factory? I don't know. I maybe you put in the block name scanner, or well, I've always had it, Jen. So yeah, once I clicked on it, one day it just appeared and it's always been there. So let me see. Yeah, I'm sure you just click on scanner or remove. So maybe you can find that function. Okay, so that was the US CAD. So I'll take those away for now, just to clean up the chart a little bit. Desiree asks, do you think SMB will raise rates in the light of the Credit Suisse? Yes, they will. Okay, I hate sounding so definitive, but they probably will. Despite the Credit Suisse situation or crisis, um, I think monetary policy is still going to be um, somewhat ranking higher. And also, it seems to be that the Credit Suisse situation has somewhat settled, is somewhat settled, not completely, but is somewhat settled, given that UBS was likely to buy, or is being made to buy, Credit Suisse at about 3 billion, if I'm not wrong. I think there was a headline here, or somewhere else that I read, probably somewhere else that I read, where it was at a 3 billion valuation. Right. So yeah, quick answer is that I do think the SMB tomorrow is likely to continue raising rates by 50 basis points, but just be extra careful with the SMB. I've seen what they did during the unpegging against the euro many years ago. It was a big surprise. So I think that most of the time, from my experience, the SMB is the central bank to come up with the biggest surprise compared to everyone else. So I wouldn't rule it out that they will pause, but I do think that 50 basis point rate hike is most likely going to come up. All right. Bank crisis should come back after FOMC, my 2 cents. Yeah. The main thing is what's going to happen at FOMC, right? After that, or during this press conference to, well, early tomorrow morning, main focus, I think a lot of questions are going to come in to say, what's going to happen? What's going to happen? And I think that the approach the FOMC might have is that the FOMC is possibly going to focus more on the monetary policy, while they're going to leave the banking crisis to the other sector or the other departments. All right. So add on to BL's sharing on that. Click on up next to get the mini charts. Okay, let's try that. So click on up. No, that's down. Where's up next? Emmanuel, where is up next? Click on up next to get the mini chart. Okay, so JNB, Emmanuel says on YouTube, click on up next to get the mini chart. We'll figure that out. Okay, so with that, that's the news for today. The big one for today, we already had it. Expecting the pound dollar to get higher. I'll show you more on the charts later. But do remember, just today, I've had only one quick trade, well, two quick trades, one medium and one quick trade on the Aussie dollar, nothing else. I'm not anticipating that I'll be getting into any more trades today unless something happens. I'll probably be waiting, staying neutral, waiting for the FOMC tonight or early tomorrow morning, and then following that, the SMB and the Bank of England's interest rate decision. Okay, so let's look at the charts. Just the word actual. It works. Okay, so it works for BL. Just about the word actual. What do you mean, Desiree, about the word actual? Oh, great. JMB found mini charts. Fantastic. Hey, we're here solving problems. Good stuff. Okay, so this is the dollar index chart. We spoke about this. We got our summary sheet there. We are on the 22nd of March. Right. Yesterday, when we spoke about this, I'll zoom in a little bit. We're looking for it to break below, right? Consolidating, possible breakdown to 103. It did that exactly. Look at that. Came straight down. So it consolidated in this range when we spoke about it at 3 o'clock. That point there, it broke down, hit 103 right there, and then bounced back up to test that support, now turned resistance level. All right, I'll take one of this away. There's less lines there. Right, so that support turned resistance level. So it hit 103 and bounced up. Now, considering that nothing much is going to happen, or hopefully nothing much is going to happen all the way to the non FOMC later. Again, coming to the FOMC, 25 basis point rate hike, pretty much expected, pretty much priced in. The surprise move by the FOMC would be to not increase rates, right? We don't expect them to increase by more. The surprise move will be to not increase rates. And if the FOMC doesn't increase rates, they hold it at 4.75%, given that markets are expecting at 25, that's going to disappoint markets, right? That's going to disappoint markets. And what that means is that we're likely to see a disappointment. We're likely to see the dollar index trade lower. Okay. All right. It's likely to trade lower. So first move, I'm thinking, right, if this resistance of 103.27 or that 103.40 level here holds, all right, I'll move this to the middle area, so about 103.40 as my resistance area, 35 thereabouts. If this level holds, then we're likely to see the dollar index trade lower, firstly towards that 103 level. Okay, so we're talking about if the Fed Reserve surprises by not increasing rates. Pretty much priced in, given that they're going to increase rates. The consideration is what's going to happen on the statement. I don't think they're going to say too much about the banking crisis on the statement. But during the press conference, we're likely to hear the FOMC being a bit dovish, right? We're likely to hear them being a bit dovish, or Chair Powell being a bit dovish, being a bit more, what's the word? Careful or concerned because of the banking crisis. The last time Chair Powell spoke, he said that the Fed Reserve was ready to raise rates further if required or if warranted by data. Yes, that view might still hold, but they might look a little bit more concerned, more careful, more cautious at this press conference, at this rate statement or the accompanying rate statement. So because of that, if they do present that dovish view, then we could see this trade down towards that 102.66 level. Okay, so we're looking for the dollar index to trade lower, break 103 to 102.60. Okay, that's the general view for the dollar index to trade lower, to trade down, given that we're going to see a rate hike that's priced in already, and we're going to see a rate hike that's priced in and a possibly dovish Fed Reserve press conference. Okay? Any questions on the... Am I lagging? Is this working? It says that I'm connecting, so I'm just wondering what's happening there. Okay. Hey, Robbie's on both. He's on YouTube and on TradingView. All right. Well, why I'm concerned is that it says connecting on my TradingView platform thing. So okay, good. Where was I? Okay, so that's the dollar index view. Any questions? Let me know. That's also, I mean, a few people have messaged me asking what's my view on the FOMC. I do think 25 basis point rate hike 25 basis point rate hike priced in, looking for a dovish, possibly dovish view from the FOMC. Okay, so with that, then I'll do it a bit differently. Let's look at gold to start. All right. So gold, when we looked at this yesterday, I was saying that, hey, I'm looking for that bounce to buy up. It didn't bounce. It came down, hit that level, and then broke not just the horizontal support, but also that upward trend line to trade lower down to that 1933 level. Okay. So at that point, it's a little bit concerning, right? This is a little bit concerning. I think I told you guys about this yesterday because given that the dollar dropped, given that the dollar dropped yesterday and then consolidated, now a brief move to the upside, I was a bit surprised to see gold drop as well. They should have that inverse relationship where dollar drops, gold goes up, right? So take that away for now, and that didn't happen. Okay, so the head and shoulder pattern played out, broke below the neckline, came down to that 1933, now looking to break 1933. And also what you notice is that this 1933 is just right at that 61.8 retracement level. So if this breaks 19, or if price breaks 1933, it brings the next level down at about that point of 1914. I would say a bit of a interim level, and then a big support here at below 1900, 18, say about 1890, right? I don't, you know, I'm not sure. I don't feel like it should be going down. Right? I don't feel like it should be going down, um, especially given the way or the anticipation that the dollar index is should be dropping. So I think that I'm still looking. Same thing as what I said yesterday. Right now, take this away because it's invalid now. I'm looking for this to either bounce off this 61.8 level, right? Bounce off this 61.8 level, or trade down. I'm looking for either for it to bounce off here, come down and bounce off here, or come down and bounce off here. Okay, that's what I'll be looking for in terms of the gold. Looking for a bounce to buy back up, continue on with that upward trend. All right. Any questions on gold so far? Any questions on gold? Okay, so gold now um, trading lower, but looking for bounce at support levels at respective support levels. Hi. Okay. So someone asked about gold. I hope I answered your question there. Keda, about gold. Looks like it's going to trade lower, but I'm looking for that bounce to buy it back up. Okay, so with that, then let's look at our list of pairs. Okay, I am, what was this? Kiwi dollar trading down, hitting that 61, 0.6181 level, and then bouncing back up. Our view yesterday was too late, no trade. Um, it, this was yesterday at about 3 o'clock. We were anticipating that's going to possibly continue down to this level, right? So it came down, broke a little bit, and then it bounced back up. So too late, no trade at that point. Right now, it's almost, right? So this was yesterday at 3 o'clock here. We're almost at that same level again, right? Very unfortunate. We're almost at the same level again. I know this worked for the Aussie. Let me see if it works here. it's right at that 32, so it's failing to break above that 38.2 level. Right, it came very close to that 50, and then it retraced back down now. Again, looking at the dollar, you see it pushing slightly higher. So I think that what we might see here on the Kiwi dollar is possibly a retrace back down. So there's a big move down, a bounce, and then a retrace back down again. What I would be looking for in the interim, where's my thing? Okay, is possibly if in the next 30 minutes this closes as a red candle, as a pin bar to the downside, then we might see this come down towards yesterday's, no, even more than that. All right, we might see this come down towards yesterday's low, about there. Okay, so the main thing is this 0.6181 level. I still am looking for buying opportunities, given that we're expecting the dollar to weaken. So I'm still looking for possible buying opportunities. Look for it to bounce off 0.6181 or to trade up towards 6250. I would say that I don't really want to force a trade here. It's right in the middle. I think we got a better opportunity on the Aussie dollar. Okay, so I'll stay on this view. It's not too late, but there's no trade in the middle. Right, the Kiwi dollar is in the middle of support and resistance. Right, so nothing exciting there on it just bounced off. Oh wait, you talking about gold just bounced off? No. Okay, so Kiwi dollar, just bouncing off that level, turning back down a little bit. Not going to force a trade out on the Kiwi dollar because I think the Aussie dollar is a lot more interesting, right? Yesterday we were looking for it to break up. Let me take this away. I was trading the Aussie because it broke that trend line down. Last night I was trading the Aussie down towards, I think only had a quick trade down. And then when it bounced this morning, so this was up, and then this morning got in at about 9-ish, and I had that quick trade up. Right, I was just following. It's just following the trend, right? So looking at the trend, following that trend to the upside. Saw it bounce back up already. I had a quick trade about 20 pips. Stop loss was below this level at about 15. That was my trade. I didn't hold it to take profit straight away. I got out after that big push. Right, I got out after that big push. Wait. So about that 10 pip move, 10 or 12, if I'm not wrong. And then after that, I did have another quick scalp. Why I say that the Aussie is more interesting is because it is reacting to that 0.67 level. It looks like it's failing to break that 0.67 level. And if it fails to break, we could see a brief retrace back down. Hey, Fira, thank you. You're better late than never, and I appreciate that. You're most welcome. Okay, so Aussie dollar, I'm looking at this as, if it closes this way or if it closes a little bit lower, I could be looking for a short-term trade to the downside. This is going to be risky, right? So I'll have a tight stop just above 0.67. Take profit about 20 pips, so almost a 1:2 risk-reward ratio from 690. Short-term trade. But overall, if we are looking at the dollar weakening further, then I'm still looking for that push up towards 6730. It doesn't look like it's going to happen as price is moving. So this is a very small possibility for a quick retrace down. You know what? I'll tell you. Don't try and force a trade. Look for this instead. All right, look for it to break above 0.67, 67, 6705, 6710. Take profit about 20 pips, stop loss about 10, a 1 is to 2 risk reward ratio to the upside towards that 6730. Um, if it sits right there, right across, and then breaks out later tonight or early tomorrow morning with the FOMC, then we're going to see that big move to the upside. All right, so the main feature right now is 0.67. Was this quick scalp in M15? No, it was on H1. It was a setup on H1, but I just closed off because I was working on something else. I wasn't really checking my charts and just wanted to secure some profits. I was wary that the FOMC tonight, we're going to see choppy price action today. I just didn't know when the move was going to stop. Okay, good question there, Robbie. So Aussie, I'm looking for it to break 0.67 and buy to 0.6730. Okay, oops. Stop loss about 10 and TP about 20. So this is a very quick trade. Um, I'm being very wary about looking at big trades today, just because we have the FOMC coming up. We can throw everything out of whack. But we're looking for this move. Here's another one. If it breaks above, if we see it tonight and we see that weakness in the dollar, we could see it break above 0.6730. Your next resistance there is at 6780. Why are all my things missing? Okay. So 6780. Okay, so that's my target, my bigger target. But in the shorter term, we are looking at 670 to 6730 and an 80. Morning, Ian. How are you doing? Okay, so that's my Aussie trade done. Aussie setup done. With that, yen. Look at that. What a disappointment. Look for it to break. I was so keen on this. Didn't happen. So take that away. That I shouldn't draw dots like that because it's impossible to delete easily. Okay. Yen. Zoom it out just to show you the overall picture. Big downward move, broken that trend line or that bearish trend line to the downside. Now trading along that 132.50 level, which is also a respective resistance level that we've seen here and right across, and this level here, and it's forming there. Okay, I'll take this away for now and this away, given that it's broken. All right, so it's forming this level. Looking at the way the dollar is moving, pushing a little bit higher. Is there any news that's coming out? Why is the dollar pushing up? Well, no news apart from that, apart from the pound. We'll get to pound next. So looking at this, I would anticipate we might see this push up further. Okay, we might see this push up further. Okay, so guys, I'm going to add in one more thing for you guys. This one pushing up. We're looking at this to trade up on dovish FOMC. Okay, so I'm just preparing a bit of a FOMC prep session as well. Aussie, looking for this to push up as well. Same thing. Trade up on dovish FOMC. All right, yen pushing higher. What I'm looking at is that it's found this level, seems to be rejecting that. And if I zoomed right out, you can see that the last time it rejected this level, we saw a big push towards the upside, right? Rejected that 130.60 level, we saw a big push towards the upside. So I'm considering the possibility that um, if we could be buying on um, bullish FOMC results, right? On a bullish FOMC, stronger dollar pushing the US yen higher. So identifying a major level here. Yep, I like this level at about 135. Right, so I like the nice round numbers at 135 as a resistance level there. So not a trade for right now, but a possibility that if the FOMC sees a bullish reaction, right, a bullish reaction on the dollar index, then we could see this push up. So I'm giving you the multiple scenarios here, given that we have a big news coming out, good bullish news, what could happen, bearish news, what could happen, just to prep you guys on the possibilities. So I'm looking at about above 133, right? So you want to be a bit safer there, above 133 towards 135. Probably want to size down on this because the stop loss is going to be wider. So about 90 pips to almost a 180 or 1:2 risk reward ratio to the upside. Okay, I see your question there, Jen. I'll just type this up and then I'll get to that. Buy above 133, right? Stop loss 90, TP 180. Okay, could be a very nice big trade to the upside there for the US yen. Let's stay tuned to that. So, question here by Jen is: how long do you wait after the FOMC rate statement before entering a trade? For me, I will be up at 3. Was it 3 or 2? I'll be up at 2 a.m. trading the news, trading that reaction, and then the news, possibly even entering before it as well. Just trying to catch something. But for you guys, what I would say is that if you are not used to trading the FOMC, don't trade it, because for a lot of people it'll be right in the middle of the day or right in the middle of the night. Not the best psychological trading condition to get into. But with that, what I would say is that you see at 2 a.m. the numbers gets released, the statements gets released as well, right? You briefly read through the statement, and I will show you a quick view of how to read the statement. This was the Feb 1st, right? It's quite a short one as well. Yep. So it's quite a short one. The main one that you want to pay attention to is this last paragraph, right? Appropriate stance, committee prepared to adjust if necessary, take into account all that data. Okay, so you just want to read this quickly, get a view of where prices are, whether they're being dovish or more concerned. But best advice is don't enter a trade yet, because at 2:30 the press conference starts. M leader says don't gamble, don't trade FOMC or 0.1. 0.05 might be a better idea. Depends on your account size. All right. Whatever you do, don't enter a trade at 2 a.m. or at 2:30, because what happens at 2:30 with the press conference is that Chair Powell will first read the statement and then the questions come out. Right, the questions come out from the media. So with that, then you get a bit more volatile price movements. Right, what I've seen sometimes is that prices could be shooting up, and then when he starts talking, it comes all the way back down again. So just be extra careful there. Possibly take on M leaders view of not trading it, but if you are, size it down. Don't think of it as a chance to make a lot of money. Think of it as a chance to gain the experience, trade it, size it down. We have volatility, so you can actually size it down and still make quite a lot. You don't have to size it up. Robbie will sleep it out. Good man. Okay, so that's the possibility on the. Whoa, it's storming outside right now. That's a possibility on the US yen. Now, look at that pound dollar moving very nicely. All right, I'm excited when I see prices move. Okay, so the pound dollar, this reaction, we all know why. It's because of the CPI news. It has also gone up, tested that 1.22 or almost 1.2280 level area there, and it's resisted, it's halted. Don't do anything yet. Don't rush into that trade. Remember, look here, we're looking for that reaction at this point, and very nicely we saw that reaction bounce up. Okay, so I like identifying levels like that. Now, what we're looking for is a break of this 1.2280 level. Okay, in fact, what I'll do is I'll take this away because I can't find where it started from. Okay, I would say that as much as we have the high here, you know my obsession with nice round numbers, 1.23. Wait for it to break above 1.23. If I zoomed right across, we'll see 1.23 at this point here. All right. So it's look for it, wait out. It's too late to enter because of the CPI data now. I'm looking for it to break above 1.23 and possibly trade up towards 1.24. So that'll be the trade. Above 1.23, 1.2315. Take profit 80 pips, stop loss 30 to 40 pips. To the downside, we're looking for this to push up towards 1.24. Right? I like this trade, in particular, not the FOMC coming up. Why do I keep saying non-farm payrolls? FOMC 24. What happens if it breaks above 1.24? A slighter higher one is a 1.2450, and then just be extra careful. Okay, so if I drag this right across, you can see that since December we saw 1.2450, H4 time frame. Possibly this was in June last year. Okay, so I would say that on a pound dollar, we can look for it to go towards 1.24 at the most, 1.2450, but beyond that, be extra careful. Will it be resisted at 1.228? Will it be resisted at this level? It's already been resisted, right? Well, almost. But I think that given it's not a very strong resistance and it's so close to 1.23, so I think that it could find a little bit of resistance there. But with the way momentum is pushing, it could break that recent high quite easily. That's why I'm only looking at 1.23. Good question there, BL. Thank you. So pound dollar, we're looking for it to break 1.23 towards 1.24. Stop loss. Wait, break 1.23. Okay, let's write it properly. Buy at 1.2315. Stop loss about 30 pips. TP about 80 pips. There we go. No worries, you're most welcome. Okay, so that's the pound dollar, and this will be a buy on dovish FOMC. Hey, remember, as much as we are looking at all this, it is the FOMC, it is a big news event. Please exercise discretion, do your own due diligence and all that kind of stuff, because we could be entirely wrong. I have come across situations where we've done all the planning and then prices just move completely different to what we expected or not move at all. All right, so just be extra careful on that, guys. Then now on the euro dollar, right? On the euro dollar, This was super boring, right? I know one of our guys traded this up. He was just sharing with me this afternoon. So it was trading this towards upside, but it's been super boring for the whole of today, sitting right across. Funny thing was the Aussie had more movements than the euro dollar. I thought at 2 o'clock the euro dollar would start moving, but it hasn't. It's still sitting at that level. So um, it's actually quite interesting that everything looks like it's setting up to trade lower. Okay, now let me see. Thinking about this, I like this level at 1.08. Beyond 1.08, where can we look for? Let's have a look at this. We know for sure there's a level at 1.0935. Okay, so what I'll tell you is that, see, the thing about the euro dollar is very close to that resistance level, right? It's very close to that resistance. In fact, I wouldn't even call this a support level. I'll say this is a gold dotted line. It's very close to that resistance level. So don't get into a trade unless it breaks above 1.08, right? Unless it breaks above 1.08, then we can see 1.09. Um, I would say that if it does break to the downside, you could be looking for some downward move as well. This is tricky. Euro dollar is being very tricky right now. All right, so we're looking at this later today. Okay, so what I would say is that euro dollar, I'll be looking to buy up above 1.08, so about 1.0820, take profit, 100 pips, easy, stop loss about 30 to 40 pips. That is done, almost a 1:3. Alternatively, if we see a bullish Fed, um, then you could be looking to sell this down. Given that we're not seeing much news on the euro for now, I would say that I don't really like to sell it down. I wouldn't really like to sell it down. So I would say below 1.07, right? Big support level here at 1.05. And then take this up here. So this is really sharing with you my thought process when I'm looking at trades. All right. I hope you guys are getting how I'm looking at things, thinking about trades, setting up, preparing for the news. I'll take this away. It's messing charts up. And that 61.8 there. All right. So there it is. Looking at the euro dollar, if we see a bullish, bearish FOMC, or dovish, sorry, FOMC, we're looking to buy it up. If we're looking at a hawkish FOMC, then we can be looking to sell it down. Just because it's right in the middle there, and the euro dollar will tend to have more volatility, you could be looking for a big move, right? You could be looking for a big move, but you do want to consider the possibility of a hesitation at 1.06, which is at 61.8 level. Okay, makes sense to everyone? Fantastic. High five, Robbie. Right? Robbie said on YouTube, he said, yes, I did my analysis today. Same with yours for euro dollar. Very good. Okay, so that's the view. I think someone asked about the euro dollar as well. That's the view, both upside and downside potential on the euro dollar. Wait and see what happens from the FOMC before jumping into a trade. So, euro dollar, upside and a downside potential. Watch the video. Too much type, so I'll just say that. Okay. Then, hey Victor, how you doing? The Swiss franc. Hey, we did well on the Swiss franc yesterday. Broke that level, traded down, hesitation level, came to our support, so interim support level, and came to the main support. Found that main support could bounce back up. So let me put this to the side. At this point, why do I have this line here? Let's take that away. Too many things. Okay. Um, at this point here, okay, I'm going to make this a little bit more relevant. Sorry, I'm just super picky with the way I put things around. Okay, so that's my support level there. Um, I'm possibly going to take this away as my level. Okay, that's my support level and my big resistance level there. All right, that's my big resistance level on the US Swiss franc. So looking at this, do remember we do have the FOMC first, and then tomorrow we do have the US Swiss or the Swiss National Bank with their rates decision. If we do see the dollar index pushing higher from a hawkish Fed, we could see this bounce back up. But what I'll be considering is that could it break this support level, because we are anticipating that downward move on the dollar index, and also given that we're expecting Swiss National Bank to hike rates by 50 basis points. Hiking rates going to be stronger currency. So with that, hey Spiros, George, I will get to Kiwi dollar, Kiwi CAD after this. All right, no, after CAD, because I need to look at CAD first. So with a rate hike of 50 basis points, then we're going to see the Swiss franc strengthen. So I'm looking at a possibility of a break of this support level with a possible big move down towards 9098, or let's say 91 as a nice round number. Okay, so, but this is a big move, so just be extra careful there. Might not be everything that happened, might not be straight away. Might be a combination of what happened during the FOMC, or what happens during the FOMC and then also the Swiss bank decision. So at about 9.2, so below 9.2, try SMC strategy. It gives high risk reward. It does. I am trying the SMC methods as well. I have just been using, just the way I've been trading, I've been doing this for more than 10 years. So I use this method until I get to the level where I can explain to you guys the SMC strategy effectively, then I'll share with you about that as well. I do know a lot of people are trying that strategy. So it does work, but it can get a bit confusing to a lot of people. So we'll get to that. All right. So US Swiss franc looking to break below 9.2, 30, 35 pip, 40 pip stop loss, 95 pip take profit. Okay, so Swiss franc, sell below 0.92, stop loss about 35, TP about 90. All right, and then we'll do CAD, and then for George, who's been asking twice now, I'm sorry about that, George, but we'll do the Kiwi CAD after that. And hey, if you guys are finding this useful, interesting, helpful, do help me out. Click that rocket ship button, click that like button on TradingView and on YouTube, please. Thank you. Okay, so CAD, I'll take this away because it's broken those levels already. Okay, I'll take that away as well. Okay, so the CAD, you know what? I don't like it. It hasn't moved too much. As much as I deleted that line, let me just put it back in again. So we're looking at this. I would say that a weaker dollar could push this down, but it's a bit of a distance to move to the downside, and then a big push to the upside on the resistance. We already have one risky one big upward move on the dollar yen. Okay, I would say that it could sit there right across, get rejected by this resistance and turn down, right? And turn down with that dollar weakness. So I'm looking at, in terms of visual, I'm looking at this to turn down. Okay, but in terms of a trade, it could turn down. Possibly not a great trading idea there. Um, you could be looking to sell it down if it breaks below 1.3650, right? So about 2-3 a.m. time, with that dollar weakness, stop loss tight at about 20-30 pips, take profit about 60 to 80 pips to the downside towards that 1.3555 level. Yep. Okay, that would be on a dovish FOMC. Okay. So can it break up? Yes, it could, but I would possibly be wait it out. If it does break to the upside, looking to sell it back down. Thank you, BL. I appreciate that immensely. Okay, this is dollar CAD. So below 1.3650, 30 pips, 70 pips. Okay. US CAD below sell below 1.3550, stop loss 30, TP 70. Did I get it right? I think so. Let's see. Let's double check that. Oh, yeah. Okay, cool. So now, with that said, let's look at Kiwi CAD. I don't have that. Kiwi CAD. Alrighty, let's go. Oh, look at that. Interesting. All right, why I say it's interesting? It's found that level there. That's a good strong support level. It's found a big resistance there. That's a good strong resistance. It's formed a bit of a double bottom pushing to the upside. A little bit late to be trying to catch that to the upside. And considering that we're looking at the Kiwi CAD, for this to push higher, right? For this to, let me just put this in first. Okay, for this to push higher, then we're going to need either the Kiwi dollar to strengthen or the Canadian dollar to weaken. And the way we were looking at this Kiwi dollar, we're looking for this to push up. It's happening slowly as we speak. Aussie is not doing the same thing, so that's a bit concerning. And then the Canadian dollar, we're looking for that to strengthen, right? If it doesn't break above. So it looks like we're going to get that conflicting view unless the Kiwi dollar continues to push up. Interim level at about 0.8540. Okay, interim level there. I would say that if you really had to get into a trade on the Kiwi CAD, then we'll be looking for a buying opportunity to that resistance level at 0.68 from 6540, about 60 pips, stop loss about 20 pips, pushing higher, right? But a little bit of a waiting to do. There's a flag in a day time frame. Oh, wait. I see your flag. I think you're talking about that and that. So you're looking at this on the longer time frame, possibly. Yeah, you could see this break higher. Um, but we do have the FOMC coming out and all that big news. Um, I would say first move towards that point, and then look for it to. If you're looking at this on a longer time frame, first trade will be up towards 0.68. Then the next one will be if it breaks above that level and out of the flag formation, and then you can see that big one, 120 pips, 8760 stop loss, quite tight at about 40 to 120. Good stuff, right? I hope I have the same. I hope we have the same analysis there, Georgia, Spyros. All right. Okay, so that's it. That's the one I did. What else do I have? Pound yen. So we spoke about pound yen yesterday. Let's see how that played out. We were saying that buy from bounce of 159. Buy from bounce of 159. So no, wait. No wonder it doesn't make sense. I was on the daily time frame. Okay. Yesterday, so at about 159, we did that. Okay, it didn't drop to 159. Why did I say 159? Oh, that's a big move down. Okay, it didn't happen, but it's pushing higher. I remember this. M Leader was saying that he had a trade that he got out of. Um, so lucky you got out early, just because it would have been a lot worse. Now, given that it's broken above that resistance level, I would say that it brings into view the next resistance here at 164. It's currently at 162, 65, 67 now. There's a bit of an interim level there. So, why it's pushing up, it's all because of the pound dollar, right? Look at the pound dollar still pushing higher, coming towards that buy entry, very close. So looking at the pound yen, if it continues pushing higher and the pound continues pushing higher, you could be looking at a buying opportunity, 90 pips to the upside, tight stop loss at about 30 pips, or 1:2. Why is it not there? About 30 pips or 1:3 risk reward ratio to the upside there for the pound yen. Okay. Pound yen, we're looking at buying from, what was it? 130, 163, buying above 163, stop loss about 30, TP about 90. Again for about 40 pips and then bought it up at 161 this afternoon. Very good, very good. M Leader. XRP USD. Let's look at that. Let us look at that. You guys know my kryptonite. You're in for long, making good money. I hope you got in about there, Ian. Right? It'd be terrible if you got in there. But if you're in for a long at that 39 cents level, making good money. I guess you're asking me where can it get up to. We know for sure at about 50 cents will be one level there. Close to that. It's just going to continue, right? It's going to continue to the upside. It's very sentiment based, right? So we're looking at the total market cap. It's right at that level there, looking like it's going to push higher. Is there any big news? Hey, that's your answer there, Ian. Why is the XRP up more than 20%? Resolution of against Ripple. All right. So if this comes out as the way it is, then we're going to see further upside. Ooh, one more. Um, 5 reasons why it's bullish. We know. Okay. So just scrolling through the other crypto. Yeah, it's going to keep going up. I don't have anything smart to add to this at this point. You can see that the highest point it got to was 0.5577. This was in September last year. And before that, it was way up there at 0.91. So a big distance more to go. This is on a daily time frame. If you're on a long, you might see a little bit of a retrace, but with the way the news is running, with the way things are happening, we could see this push. Tonight's FOMC or tomorrow morning's FOMC could have some impact on the cryptocurrencies as well, especially if the dollar weakens. There is a little bit of an inverse relationship there, so we could see this push up during the FOMC. So I'm not going to tell you whether to hold or to close, but it does look like we could see further upside. I'm not sure if we get to 90 something cents again in a hurry, but if it breaks above this near term high, yeah, for sure. I don't see why we can't get to 55.22. Alrighty. So with that, we covered a lot. We covered um, the FOM, we covered the CPI data release, we covered the FOMC, we covered the SMB, the Bank of England's policy decision as well. With all that said, how did you find the session? We've got a lot of summary and ideas here. Please remember, trade well, trade safe. Dollar is being choppy, it's trading slightly lower. Any feedbacks, put it into the chat, let me know. And if you haven't already, do me that big favor, click that little rocket ship button, click the thumbs up button, help me out with the algorithm. Any questions? Any further questions? Thank you, Jambi, you're most welcome. Any further questions? We do tend to get over the 1 hour mark, so I think soon we'll have to get to a 2 hour webinar. That would totally kill my throat, but I'm enjoying it. Alrighty, so if you've got no further questions, if you're not used to trading the FOMC, stay out. Listen to M Leader and Robbie. They've been with me for a very long time, so I appreciate that, guys. And trade well, trade safe, and I'll catch you again. Bye-bye now. Take care.